What is your rate? This is a common question I receive from both borrowers and realtors every day. However, there isn't a set interest rate that applies to everyone since all scenarios and goals are different. What people really mean when they ask that question is what will their rate be? And I've yet to meet a single person who has told me they're looking for the highest rate available, so I imagine you're no different. The interest rate on a mortgage will determine the monthly payment and affect a home's affordability. So it's important to get the lowest interest rate you qualify for. And in this video, I'm going to teach you how to do just that. So let's start with the first step. Let's assume you've already gone under contract on a property, because that's extremely important. Looking for the lowest rate doesn't really make sense until you're at that point in the home buying process, because you're going to be locking your rate once you have a closing date, which means you have to be under contract on a specific home. So let's say that's the case. Well, then you want to shop lenders. Now, maybe you've already shopped and determined who you like as far as personality is concerned. Now you're specifically looking for the lowest interest rate. I recommend shopping with at least 3 lenders. And you're going to want to compare what they're charging you along with the interest rate that comes along with those charges. So the charges for the interest rate from a lender would be on a loan estimate, and they'd be located on the second page in box A. That's your lender charges. So when comparing lenders, you're going to look at the interest rate that's on page 1, and then you're going to look at the figures that are in box A on page 2. The lowest cost with the lowest rate is going to be your best option. That's how you determine who the better option is when it comes to the lowest interest rate from lender to lender. Now, once you've shopped lenders, you need to determine if you want to pay points to reduce your interest rate. Now, I've talked about this in other videos, but one point, and this is another question I get, I find it kind of funny. I actually get it from realtors. Realtors will ask me, hey, what does a point cost nowadays? Well, a point always is the same thing, right? 1 point is equal to 1% of the loan amount. It's always 1% of the loan amount. That's what a point is. So the cost varies based on the loan amount, but what it's comprised of doesn't change. It's always 1%. If you're paying 2 points, it's 2%. So if you have a $400,000 loan, you're paying 2 points, it's going to cost you $8,000. 400,000 times 2% equals 8,000, right? That's what points are. Now, to determine if paying points makes sense, you need to say, how much does paying this point or points save me on my monthly payment, and how long will it take me to recoup the money I'm paying up front for that rate, and how long do I think I'm going to keep this mortgage, because does it make sense for me to pay this amount of money to save this amount of money? Okay, right? So if you're going to pay $8,000, for example, and let's just say paying that $8,000 saves you $200 a month. You take the 200, you divide that into 8,000, and that equals 40. 40 is the number of months it's going to take for you to break even on the money you paid for points. So we're talking 3.5 years in that example. So you need to determine if it makes sense to pay points, but paying points is a way to get a lower interest rate, right? That's why you would do it. You want a lower rate. You're not paying points to get a higher rate. You're paying points because you want a lower rate. And there's different reasons why. Maybe you just want a lower rate. Maybe you need a lower rate to qualify, right? There's different reasons why you would do it. Another way to get a lower rate, and this is going to be the lowest rate in my opinion, is to do a temporary interest rate buy down. Now, this really only makes sense if the seller is paying for it. And the reason I say that is because the cost of a temporary rate buy down is equal to the savings from that temporary rate buy down. So a quick example, if a temporary rate buy down is going to cost you $12,000, you're saving $12,000. So it's a wash. There's no real savings if you're paying for it. The real benefit is if in your contract you've negotiated some sort of seller credit, let's call it 3% on a $400,000 property is $12,000. Well, now the seller's paying for that $12,000 temporary rate buy down, and you're benefiting from the savings, because what a temporary rate buy down can do, let's just call it a 2-year temporary rate buy down, it would reduce your interest rate by 2% the first year and 1% the second year. So if you're at 7% without a temporary rate buy down, you'd be at 5% in the first year of mortgage. Now that's a low interest rate, right? That's the way to get the lowest rate. I mean, it can be much greater than that. There's 3-year buy downs, and we have some of our clients are getting crazy credits from sellers, and we're gonna be able to get them interest rates in the 3s for the first year. I'm talking like 2020 interest rates here, right? These are COVID rates, but that's a way to get a lower interest rate without the money coming out of your pocket, but it's gonna save you the money, right? You're looking for the lowest rate, in my opinion, that's the way to get the lowest rate. Another way to get a lower interest rate is looking at different loan types. So FHA loans right now have rates that are about a full percent lower than conventional mortgages. So if you want a lower rate, right, and you're in a loan amount that would qualify for FHA or conventional, and maybe you're putting less than 20% down, because I don't recommend putting or getting an FHA mortgage with 20% or more down, because you'll be paying mortgage insurance. Check that out in my other videos. I explain how mortgage insurance works. But if you're putting less than 20% down, you'd want to look at an FHA loan versus a conventional, because like I said, FHA loans right now at least have interest rates that are about a full percent lower than conventional mortgages. Another way to get a lower interest rate is the loan term. And by that, I mean the length of the mortgage. The shorter the loan term, the lower the interest rate. So let's just call it a 15-year mortgage. 15-year mortgage rates are around a full percent lower than 30-year mortgage rates. You're gonna have a higher payment if you go to a shorter term, but we're focusing specifically on getting a lower rate right now, not lower payment, right? If you want a lower rate and you can afford the higher payment that comes with a shorter loan term, then you should go with a shorter loan term, because you're gonna get the lowest rate available in the market. And the final way to get a lower interest rate is to look at getting an adjustable rate or a variable rate mortgage rather than a fixed rate mortgage. Now, a fixed rate mortgage means the rate does not change for the entire length of the loan. So if it's a 30-year fixed rate mortgage, that means your rate's the same in year 1 as it is in year 30. If you have an adjustable rate or a variable rate, same thing. That means you're gonna have a lower rate for a set period of time, and then it will adjust once that period of time elapses. So in most cases, adjustable rate mortgages are either 3 years, 5 years, or 7 years. That means on a 3-year adjustable rate mortgage or ARM, your rate would be fixed for the first 3 years, and then it would adjust every year after that for the remaining 27. A 5-year would be fixed for 5, adjust for 25. 7 would be fixed for 7, adjust for 23. If that all makes sense. But because you're not having the lender fix an interest rate for all 30 years, they're able to offer a lower interest rate on the fixed period of time within that loan. So that's another way to get a lower interest rate on your mortgage. So now that you have a better understanding of ways to get a lower rate, I hope you have more confidence in becoming a homeowner. If you have any questions about your specific scenario, please leave a comment below. I reply to 100% of the comments left on my videos, and make sure to subscribe if you'd like to continue educating yourself on all things mortgage and real estate related.